Hello and welcome to the show. There's a little Fleetwood Mac for you to get into your morning, and really crazy out there. I was going to come on yesterday and talk about the VIX term structure because we've had such a extreme level of the term structure here, but I'm hoping it didn't prompt a lot of people to actually put on VIX shorts, because this is one of those, I guess, if you wanted to use conspiracy theories, you could call it a false flag type thing where, like, a lot of times when the VIX term structure looks perfect to short the VIX, those are the moments that you kind of have to be really careful, because it seems like every time it just looks the best to short stuff is when you get a pop. And I was very concerned about getting a pop yesterday, which we actually did. But let's take a quick look at the VIX term structure, and then I want to talk about positions yesterday. Things worked out great for me. As you may know, I've been looking for the market to go down for some time now, and so when it actually did, I was ready for it. I was able to buy some. I bought some puts in Lululemon yesterday that expired today. I was short yesterday morning coming into Lululemon. If we look at the chart, we can see yesterday on the open, it just rallied a lot. And thus, I got stopped out of my short. You can see here's the action yesterday morning. It went straight up. And so I was short a little bit, like 100 deltas, and I just gave up on my short, right? I got rid of it. But then when we got up to the top here, I saw the market starting to sell off. And I was like, well, maybe I'll buy some puts that expire tomorrow. And I only bought about $600 worth of puts. I paid an average of $131 for these puts, $1.31. And they went out yesterday at approximately, let's see, I think they went out at like $9. So yeah, I bought puts for $1 something, and they went out at $9. So that worked out great. Very exciting. I caught a ride on the down train. I was short Lululemon, and it dropped like $10 in front of me during the day, and it was very fun. You know, when you're on the right side of a trade and it's all going your way, that's very fun to have it actually come to fruition for you. So that was great. Let's take a look at the VIX term structure, though. I was going to come on yesterday morning, and then I decided I would lay off because I don't want people to sometimes even when I say don't do something on the show, people do it anyways. And I know it looked like a great setup for the VIX yesterday morning, but it wouldn't have ended up working out if you put it on, just because we did get a little bit of a pop yesterday, as I was actually sort of expecting we might. So, but still, very rich setup here. Now, if we look at this is even with the pop, and you can see there's over $2 between the spot VIX and the front month future, which is a rich level, right? So that's even with a little bit of an up move here. Now, this huge front month future here, which I'm pointing at with my pointer, it has to come down to meet the spot VIX at some point by expiration. Now, this is just the very beginning of the expiration cycle. Remember, expiration happened last Wednesday, 2 days ago. But so it doesn't have to converge for a little bit, but over time this will converge with spot definitely by the end of the cycle, and that's got $2 of room to move to the downside. So this very much favors the bears as far as edge in this trade. However, that can easily be foiled by just a pop up in the VIX, which is what we've gotten over the last day or two. We've gotten the pop in the VIX as the market sells off. So I would be looking to put a position into a spike. So if we do get some kind of a spike, I would be looking to initiate a VIX short sometime during that spike. But I'm holding off doing that for the moment. Now, I haven't been very on as far as the VIX recently, because I've been holding off, but I would recommend checking out, if you have a Tasty Trade, I would check out this post on Tasty Trade. Now, Tasty Network is there's a show that's daily live on tastytrade.com, which you should check out. Tony Batista and Tom Sosnoff put it on, and it's great stuff. You know, I have a Tasty Trade account, and I'm a big supporter of theirs. These guys stood in a pit next to me. I was a pit trader in Chicago. I traded at the CBOE, and I was an equities pit trader. What that means is there were up to like 50 small pits that traded individual stocks. Each pit had like 20 stocks in it. And then there were 2 big pits that traded indices. And the one that these guys that started Tasty Trade in was, they were in the one what we call the OEX pit, which is now where the VIX trades. You might have seen pictures of the VIX pit at the CBOE. Well, these guys got their start there. I had a bunch of friends in the OEX, and I would go to lunch with my buddies every day. We would go to Ceres and get hamburgers for lunch every day. Most of my buddies hung out on the side by Hammer, Hunt, and Moose, down on the right side. If you're looking at the pit, I believe Tom Sosnoff and Bat were like in the center up a little bit. I think I've met BAT before. I don't think I've met Tom Sosnoff before. I think he was pretty much like kind of coming off the floor by the time I got there. I got to the floor in 94. Anyways, so check out Tasty Trade. I would recommend getting an account with them because we want to support our buddies. They're friends of the show here. We've had Mike from Mike and His Whiteboard on the program before, so support these guys. But they have some great analysis of numbers that's not technical analysis. It's actually probability analysis, and it's different. These guys have a similar view to mine on technical analysis, which essentially is that in and of itself, technical analysis is not that helpful. Now, some people who follow charts every day, they get into the kind of momentum of things, and they're able to use technical analysis as kind of a lens to talk about the market, and it becomes part of their process, and they're able to make it work for them. But just in general, just doing a mathematical analysis of certain chart patterns and whether they work or not, these guys have done some good work, Tasty Trade, in disproving actually a lot of that stuff. Another thing about Tasty Trade, of course, is that very much like Don Kaufman and the TheoTrade guys, they are kind of known for being perma-bears in a way. They never met a market they didn't like to sell a little bit. Tom Sosnoff probably more than Bat. But anyway, check out, I did, this guy, cool guy, Brian, tweeted at me the other day about this this program that they had on Tastyworks. Let me see if I can find it here. Yeah, here we go. Tony Batista, Tasty Trade Market Measures segment on volatility distribution. So they have this program, Market Measures, and they talk about how, and basically the point of this, so if you don't have time to watch it, let me summarize for you. It basically says the VIX is usually lower than it is now, and it spends most of its time below below 17 or something. So, we've been in an elevated VIX state for some time now. So look for things to revert to the mean at some point. We're not going to stay elevated forever. And so this is a case for shorting the VIX and to be on the downside of things to some extent, or at least that's how it's being interpreted by a lot of VIX traders. I am still kind of gun shy about shorting the VIX, but I would have a plan in place ahead of any sort of spike we get here to jump on the short side, because there is a lot of edge to the downside right now in the VIX play, but it requires some timing as usual for that. Anyways, I've been very bearish lately, and I think the downside activity could continue today. So be careful out there, folks. Once again, it's been working out for me, jumping on these shorts, but I don't like to really stay short overnight. I did end up coming in pretty short last night, but I'm going to look to straighten that out early today. We'll see what happens moving forward here in the market, but I just feel like I felt for a long time that this market is overdone, and usually I don't have an opinion, but I've had a very strong opinion for a while now, and I'm letting those voices in my head. I'm listening to the voices in my head for the moment, which may or may not be a good thing as far as the market is concerned. So I haven't been as maybe I've been a little bit unreliable lately as far as this stuff goes, because I've been so negative on the market. I've been laying off shorting volatility, and I've just been negative on the market, as I said before. So there you have it. All right, let's see where we are right now. I don't see. Oh, here we are. For a second, I was like, are we still live? Yeah, we are. Okay. Technical difficulties. What's up, folks? Hey, what's up, Marcella? Anybody else there in chat? Hello, are you with me, folks? This is an opportunity here, folks. Market going down. Let's try to capitalize. We never know how many opportunities we're going to get, so we have to capitalize on the ones that come our way here in the markets. And like I said, I've been looking for the down move. We finally got it yesterday. We'll see if it continues today. Tesla did get down to the 1400 strike earlier today. The market has come back a little bit. Let me show you what I'm watching real quickly, and then I'll let you go here. Let's go to the charts. I spend a lot of every day watching the NASDAQ, because I feel like the NASDAQ is what is pulling the market around. So if we type in NQ here, yesterday with Lululemon was very, very, very strong on the day, and with the market pretty much unchanged, it was up like $8, but you saw the NASDAQ start to grind lower, and inevitably, if the NASDAQ and these big tech stocks start to grind lower, it's going to pull everything else down with it. So whatever your stock you have on, whatever's going on in it, it's going to be affected ultimately by these moves in the major tech stocks like Apple, you know the names: Netflix, Tesla, Google, Amazon, Microsoft. These names are going to pull the market, and when they go lower, the market is going to go lower inevitably. And no matter what stock you have and whatever is going on with it, it's going to get pulled with the market when we get these big market moves, and that's what we've seen. Hey, what's up, Spencer? I haven't seen you in a bit. How's it going, buddy? Terminal sandwich, yes, good observation. There has been a rotation from tech lately. We've seen it with people taking their money out of tech stocks and putting them in smaller companies like in the Russell Index, this sort of thing. NASDAQ down, these other indices up. But the overall theme that's just stuck in my mind, and I'm a one track, I just can't shake it, is just the U.S. economy is being negatively affected by this COVID thing, and maybe the media has overblown it or whatever, but still, there's no reason in my mind why the U.S. stock market should be way higher in the case of the NASDAQ than it was before all this stuff happened, because this stuff is hurting sales. It's hurting production. It's hurting. There's a lot of people unemployed. They can't buy stuff because they're unemployed. So some of these stocks way higher than they were before just doesn't make sense to me. Usually the market, when it doesn't make sense, it brings itself back into line over time, and that's just been in the forefront of my mind. You see these deaths from this stuff going up and up and up, and the market just seems to completely shake it off. I don't think the market can just be so different than the rest of the economy forever. Yes, AMD was very, I don't know how it ended yesterday, but AMD was all the chips were very strong yesterday, leading the market. I noticed MU was also up there. We've seen the story of sectors kind of diverging lately. You saw it a lot with the medical stocks being very strong. And of course, this all to do with virus vaccine news. We saw AstraZeneca coming out and saying that these Oxford tests were positive. There's a whole bunch of companies that are involved with this. The U.S. is sending money to all these companies and trying to help with the efforts, which is good, I would say. Dollar's been crushed, yeah, and you've noticed the dollar being crushed in the gold prices, of course. Now, to me, if you've watched me for a while, you've heard me say this before, but to me, gold never changes its value. Gold is always worth the same amount. What changes is how many is the pricing of the dollar. So as the government spends more money on X, Y, and Z and prints more money, dollars are worth less. So it costs more dollars to buy an ounce of gold. So you see the gold price going up. You see the silver price going up. To me, this is an acknowledgement by traders that, yes, the dollar is going to become weaker and devalued. The more spending by the government and printing new dollars, the less each dollar is worth, and thus it costs more dollars to buy an ounce of gold. An ounce of gold can buy you, an ounce of gold, its value stays the same. An ounce of gold can buy you an okay horse or I think I just lost some of my screens. It can buy you an okay horse or a good suit. That's what an ounce of gold, and that same ounce of gold could have bought you 100 years ago the same thing, an okay horse or a decent suit. And is vol about to collapse? That I do not know the answer of that for that question, Dasboff. Volatility is still in a higher range than it has been. A year ago we would have sold this level very extensively, that 27. However, with the markets moving lower, vol is popping, right? So it's ambiguous what is happening right now. You can see in the term structure. Now, we know the term structure does not predict volatility. However, people are willing to pay that premium for those futures out there by expiration, the election. And so that's kind of where it is. And my feeling right now is that vol is, fairly priced. Thus, I don't see a whole lot of edge in doing one thing or another. Now, if you were to watch the recent episodes of Volatility Views on Option Insider Network, you can see the discussion between Mark Sebastian and I. Mark Sebastian more of the feeling, and also I believe Andrew G more of the feeling that yes, there is a potential for this stuff to really, really collapse, and certainly after the election for it to collapse even more. Now, between now and the election, that's the big question. What happens between now and then? It does have the potential certainly to go lower, and if I think that putting some sort of spread on where you are shorting the where in VIX ETPs where you are buying put spreads that expire after the election would be a smart move, because the average VIX is below 20, right? I remember when I first started trading the VIX in like 2017, it was always like 12, 11, 9, 8, and people would say, well, the average VIX is 17. I would say, wow, that sounds really high. I bet that's not really true. I bet just there are a couple spikes that change the average a little bit, but it actually just stays most of the time around 10. But now we've seen the VIX way up here above 20 for a long extended period of time. Now, reason seems to say that it will come back to below 20 at some point. However, between now and the election, there's a lot of potential fireworks. Terminal sandwich. I am not an advocate of buying the VIX and holding, because there's no way to specifically buy the VIX and hold. You can't buy the VIX. You could buy VIX. You could buy options on the VIX futures. I guess that's what you would mean by that. The VIX is just a formula based on some options in the SPX. There's no way to actually buy the VIX. Like, you can't go in there and say, I want to buy the VIX. And the futures, the VIX ETPs, all those things decay, and we see them in heavy decay right now. So it's a tricky thing because, yeah, you could buy it, but you're going to pay a tax to buy the VIX, and the tax is it's going to decay. Whatever you buy is going to decay in front of you over time. So, for example, okay, the VIX is 27. Listen to this one, terminal. Okay, the VIX is 27 right now, right? If you were to buy the VIX futures instead of the VIX, you would have to pay at least 29. If you bought the October future, you'd be paying 32. So if you buy the VIX future, you're not buying a 27 VIX, you're buying a 29, 30, 32 VIX. And I would be very careful about that. As the earlier part of this conversation, there are a lot of people that feel that this VIX could move below 20 very quickly at some point soon, as the markets kind of settle a little bit. But if you get a sign selling an option, I believe that, I don't know the answer to that. I believe it's cash assignment, that it just gets assigned to cash. But the way people hedge the VIX is with VIX futures. So they're going to center the VIX options on whatever the front month future is for that. Or, if you're buying options that expire, any options that expire up to the next future are going to be hedged with that future. So when people trade VIX options, they're going to hedge it with the VIX futures, and they're going to make markets based on those VIX futures. But I do not know if it's cash settled. I believe it's cash settled and they settled to cash, but I'm not 100% sure of that. But it's certainly, there's no VIX underlying that they could give you if you're short a call and you get a sign on expiration. So it couldn't settle to like the VIX because it doesn't exist. So that's why I believe those options are cash settled. I will find that out for you though and put it in the description below. But yeah, it's a tricky business. I've never advocated being long VIX ETPs. I have traded to the long side recently a little bit for a new thing for me, but there's a lot of pressure to the downside here. If we look at behind me at this chart, you can see contango in the front month is 4.25%. Look for that to expand as these futures move and stretch down towards spot. So that's 4% per month that this stuff's decaying. So the risk of the VIX is basically, it's a little confusing, like I said, because there is no specific VIX that you can trade. So when you buy these products, they tax you with decay. So you got to, if they didn't do that, then everybody would just buy the VIX and you just hang out until there's a spike, and then you make your money, and then the spike recedes again, you just buy the VIX and you just hold on to it until there's another spike. But because there's decay, it forces you to be more selective, because if you just buy these things, they're slowly just going to go down on you. All right, I'm going to let you go into the trading session here. I'm going to prepare myself for Lululemon, which I am coming in short. Careful today. I feel like this market has a lot more to the downside to go, but that's just like my opinion, man, and I wouldn't listen to my opinion. I would trade based on your own ideas, analysis of this situation, because the only way to make money trading is to have your own ideas and to base it on your own analysis of the situation. Using someone else's ideas is not going to work for you. Unfortunately, that's just kind of the way it is. Let's see what we got going on here. All right, so thanks for watching today, and best of luck trading. I'm going to play a couple more bars of Fleetwood Mac on the way out for you here. So so best of luck trading today. I'm short the market and looking for more of a down move. Do your own thing and have a plan.